Let's be real. Investing can feel like you're trying to solve a puzzle with half the pieces missing. You're busy with work, family, and life. You don't have time to sift through endless financial reports or stare at confusing charts all day. For years, the most powerful tools were reserved for Wall Street pros with billion-dollar budgets. But the game is changing, and it's changing fast. Artificial intelligence, or AI, is no longer some far-off sci-fi concept. It's here, right now, and it's leveling the playing field for everyday investors like you and me. You don't need a PhD in computer science or a fancy finance degree to get started. Think of AI as a super smart assistant, one that can process more information in a minute than you could in a lifetime. It's a tool that can help you cut through the noise, make more informed decisions, and stick to your long-term plan with greater confidence. This isn't about chasing get-rich-quick schemes or trying to time the market perfectly. It's about using technology to build a more robust, personalized, and disciplined investment strategy. The goal is to make investing simpler, more accessible, and ultimately, more aligned with your personal financial goals. Forget the hype and the jargon. AI is simply a new and powerful way to make smarter choices with your money. The best part? The barriers to entry have never been lower. Many of these powerful tools are now available right on your phone or laptop, often for a fraction of the cost of a traditional financial advisor. They are designed to be user-friendly, helping you navigate the complexities of the market without needing to become an expert yourself. This guide is designed to show you exactly how. We're going to break down what AI really is, how it can specifically help your portfolio, and provide a clear step-by-step plan to start using it today. When people hear the term artificial intelligence, their minds often jump to scenes from science fiction movies, robots taking over the world, or all-knowing supercomputers. The reality, especially in the world of personal finance, is far more practical and a lot less dramatic. At its core, AI is simply software designed to learn from data, identify patterns within that data, and make predictions or recommendations based on what it has learned. It's a powerful pattern recognition machine that gets smarter and more accurate the more information it processes. You are already using AI every single day, probably without even thinking much about it. Consider your favorite streaming service. It doesn't just randomly show you a list of every movie ever made. It analyzes what you've watched before, what other people with similar tastes have enjoyed, and then it recommends shows and movies it thinks you will love. That's AI at work. Or think about the navigation app on your phone. It analyzes real-time traffic data from thousands of other drivers to find the fastest route to your destination, rerouting you instantly if an accident clogs up the highway. AI is simply a tool that takes a massive amount of information and turns it into a useful, actionable suggestion. In the world of investing, the principle is exactly the same, but the data is different. Instead of movie preferences or traffic patterns, financial AI sifts through decades of stock market prices, corporate earnings reports, economic data, and breaking news headlines. For example, a robo-advisor is a classic application of financial AI. This is a digital platform that uses algorithms to build and manage a diversified investment portfolio for you. You start by answering a few simple questions about your financial goals, your timeline, and how you feel about risk. The AI then uses this information to build a personalized portfolio of low-cost funds tailored just for you. Another simple example is an AI-powered stock screener. So, how can this technology actually make a tangible difference in your investment returns and overall financial health? Let's get specific. 3 key ways AI can supercharge your portfolio. First, enhanced personalization and goal alignment. One-size-fits-all approaches rarely work. AI creates highly customized strategies at scale. It can build a portfolio tailored to your age, income, risk tolerance, specific life goals, saving for retirement in 30 years, a down payment on a house in 5. Personalization doesn't stop at setup. As you near retirement, your portfolio should become more conservative. An AI platform manages this automatically, a glide path. It adjusts allocation over time, reducing exposure to volatile stocks, increasing holdings in more stable bonds, keeping your portfolio aligned without manual work. Second, disciplined risk management and automated rebalancing. Emotions are often an investor's worst enemy. Fear when the market is falling, greed when it's soaring. AI is immune to those biases. It runs on logic and predefined rules. It can continuously monitor risk and alert you, and it can automatically rebalance your portfolio. Rebalancing, selling assets that have performed well, buying those that have underperformed. For example, Target 60/40 gets pushed to 70/30 by a rally. An AI system sells stocks and buys bonds to return to 60/40. This enforces buy low, sell high, and protects gains. Automation removes the guesswork and emotion from long-term investing. In the past, finding profitable, low-debt dividend growers meant hours or days of research. An AI screener can do that same work in a matter of seconds. It scans the entire market, applies your specific filters, and presents a curated list that matches your strategy. It's not magic. It's just a massive efficiency boost, saving you your most valuable asset, your time. While the benefits of AI are compelling, it's crucial to approach this technology with a healthy dose of realism. AI is a powerful tool, but it is not a crystal ball. It cannot predict the future with perfect accuracy, and anyone who tells you otherwise is trying to sell you something. One of the most significant limitations of AI is that it learns from historical data. It is exceptionally good at identifying patterns that have occurred in the past. However, the financial markets are notorious for throwing curveballs and creating unprecedented situations that have no historical parallel. A once-in-a-century pandemic, a sudden geopolitical crisis, can create market conditions that an AI model has never seen before, potentially leading to flawed recommendations. Another risk to be aware of is a concept known as overfitting. This happens when an AI model is trained so specifically on past data that it becomes brilliant at explaining what already happened, but fails miserably when it encounters new, live market data. It's like a student who memorizes the answers to last year's test, but hasn't actually learned the underlying material. A model that promises impossibly high returns based on historical backtesting is often a red flag for overfitting. This is why transparency is so important. You want to use tools that are built on sound, long-term financial principles, not on black box algorithms that promise a secret formula to beat the market. Furthermore, the output of any AI system is only as good as the data it's fed. The old saying, garbage in, garbage out, is especially true here. If the data used to train an AI model is flawed, the decisions it makes will also be flawed. If the data is incomplete, the decisions will also be incomplete. If the data is biased, the decisions will also be biased. An AI trained on only a bull market. The 5-step playbook. Putting AI to work today. Feeling ready to get started? The good news is that integrating AI into your investment strategy doesn't have to be complicated. You can start small. Learn as you go. Here is a simple 5-step playbook you can follow to begin harnessing the power of AI for your portfolio right now. Step 1. Before you even look at any tools, clearly define your financial goals. Technology is only useful if it's helping you get where you want to go. So, take a moment to ask yourself the important questions. Are you investing for retirement in 25 years? A down payment on a house in 7 years? Or simply to build wealth over the long term? Write down your specific goal. Write down your time horizon. Write down your general comfort level with risk. Step 2 is all about getting your financial house in order. AI tools are powerful, but they can't fix a shaky financial foundation. Before you start investing, make sure you have 2 key things in place. A plan to pay off any high-interest debt, like credit card balances, and a fully funded emergency fund. An emergency fund is typically 3 to 6 months' worth of essential living expenses in a safe, accessible savings account. This fund is your financial firewall. It ensures you won't be forced to sell investments at the worst possible time to cover costs. With your foundation secure, move to step 3. choosing the right AI tool for the job. Your choice should directly align with the goals you set in step 1. If you are a long-term, hands-off investor, a robo-advisor is likely your best bet. These platforms build diversified, low-cost portfolios and manage them automatically. If you are a more hands-on investor who enjoys researching individual stocks, use an AI-powered stock screener. Or use a portfolio analysis tool to generate ideas and analyze your existing holdings. Start with one simple, reputable tool that meets your immediate needs. Step 4 is to start small and learn. You don't need to move your entire life savings on day 1. Open an account with a small amount you're comfortable experimenting with. Think of this as a learning phase. Transfer a small portion of your portfolio and observe how it works for 3 to 6 months. Pay attention to its recommendations. Pay attention to its communication. Pay attention to its performance during different market conditions. This lets you build comfort and trust without taking on significant risk. Okay, yeah. Sarah was a diligent saver and had been putting money into her retirement account for years. Her portfolio consisted of a few broad market index funds, a strategy she had read about and felt comfortable with. However, her approach was very passive. She checked her account balance maybe once a month, but she rarely made any adjustments. She knew she was supposed to rebalance her portfolio periodically, but she wasn't quite sure how or when to do it, so she mostly just let it drift. She felt she was on the right track, but worried she might be missing something. Before using AI, Sarah's portfolio was subject to the whims of the market. During a strong run for stocks, her allocation, which she intended to be a moderate 70% stocks, 30% bonds, had drifted to over 80% stocks. This meant her portfolio was carrying significantly more risk than she was comfortable with, but she wasn't fully aware of the extent of it. Furthermore, she was paying management fees on her funds that were reasonable, but not the lowest available. She felt a low-grade anxiety that her hands-off approach might be costing her in unseen ways, both in terms of risk, fees. Seeking a more structured and less stressful approach, Sarah decided to try a well-known robo-advisor. She spent about 15 minutes answering an online questionnaire about her age, income, retirement goals, risk tolerance. Based on her answers, the AI-powered platform recommended a globally diversified portfolio of low-cost exchange-traded funds with a target allocation of 70% stocks, 30% bonds, very similar to her original intention. She decided to transfer a portion of her savings to the new platform to test it out. The platform immediately invested her funds according to the plan and set up automatic rebalancing. 2 years later, the difference was clear. While her overall returns were quite similar to what she would have earned with her old portfolio, the journey was much smoother. During a couple of sharp market downturns, the robo-advisor's automatic rebalancing feature had worked behind the scenes, selling bonds, buying stocks, which helped cushion the fall and position her for the recovery. The final step in the playbook, step 5, is to review and adjust. Every 6 months or so, take some time to check in on your financial plan. Has your income changed? Have your goals shifted? Life happens, and your investment strategy should adapt accordingly. Use the insights from your AI tool to highlight where adjustments might be needed, but always make the final call yourself. The market for AI investment tools can feel crowded, but choosing the right one gets easier when you know what to look for. Your first filter should be simplicity and reputation. Opt for a well-known platform with a long track record and positive user reviews. Next, become a student of fees. Costs are one of the few things you can control in investing, and they massively affect long-term returns. Compare the fees of any tool you consider. For robo-advisors, this is an advisory fee, a percentage of assets. Often it ranges from 0.25% to 0.50% per year, plus the underlying ETF fees in your portfolio. Look for platforms transparent about total cost and that prioritize low-cost funds. A small difference in fees can compound into tens of thousands over a lifetime. Transparency matters. Be wary of tools that act like a black box, making decisions without explanation. A good AI platform gives clear, easy-to-understand reasons for recommendations. Does it explain its rebalancing strategy? Does it show the assumptions behind its projections? You don't need to be an algorithms expert, but you should understand the investment philosophy guiding the tool. Trust is built on transparency. Finally, use trial periods and demo accounts. Try the interface or run a simulated portfolio without real money. Read independent user reviews and verify the company is a registered investment advisor with regulators like the SEC. As we stand here today on January 10, 2026, the integration of AI into our financial lives is still in its relatively early stages, but its trajectory is clear. The tools that are available now are already remarkably powerful, but what we will see in the coming years is a move toward even deeper and more holistic financial planning. The future of financial AI is not just about managing your investment portfolio. It's about creating a unified system that helps you manage your entire financial life. Imagine an AI assistant that not only rebalances your 401k, but also analyzes your spending habits to find savings opportunities. This future AI will likely connect to all of your financial accounts: your checking, your savings, your credit cards, your mortgage, your investment portfolios, to create a single comprehensive view of your financial health. It could proactively alert you that you're on track to overspend your monthly budget, or suggest you use a surprise bonus to pay down your highest interest debt. It could model the long-term impact of different financial decisions, showing you how taking a new job with a higher salary or deciding to work for 3 more years could affect your retirement date. The focus will shift from simple portfolio management to complete financial wellness optimization. We will also see AI become much more conversational and accessible. Instead of clicking through menus on an app, you might simply be able to ask your financial assistant questions in plain English, like, how much more do I need to save each month to retire at age 62 instead of 65? Can I afford to take that vacation to Italy next summer? The AI would then analyze your complete financial picture and provide an instant, data-driven answer. This will break down even more barriers, making sophisticated financial planning accessible to everyone, regardless of their background or level of financial literacy. However, with this greater power comes a greater need for ethical oversight and robust regulation. As AI takes on a more central role in our financial decisions, questions of fairness, bias, and data privacy will become even more critical. Regulators will need to ensure that these algorithms are not inadvertently discriminating against certain groups or pushing people into unsuitable products. The world of investing is undeniably complex, but the tools available to navigate it have never been better. Artificial intelligence is fundamentally changing the game from a Wall Street-only tool to an accessible assistant for everyday investors. It can help you build a personalized plan that reflects your goals, enforce the discipline needed to stick with that plan through market ups and downs, save you money on fees, and save you time while reducing your stress. It democratizes sophisticated investment strategies. But remember what AI is and what it is not. It's not a magic wand that eliminates risk or guarantees market-beating returns. It's a co-pilot that processes vast amounts of data, handles complex calculations, and executes your strategy with tireless discipline. It's there to support your decisions, not make them. Your financial future still rests on your shoulders. The best investors combine AI's analytics with human judgment and an understanding of their life circumstances. Getting started is less intimidating than it sounds. Begin with a clear understanding of your own goals, build an emergency fund, and start small with a reputable, transparent, low-cost tool. Don't dive into the deep end all at once. Experiment with a small portion of your portfolio, build confidence, and learn how these tools serve you. Let technology handle rebalancing and monitoring so you can focus on living your life and staying on track toward your goals. The opportunity to supercharge your portfolio is here, and it's more accessible than ever. Don't let complexity or fear hold you back from taking control of your financial journey. Embrace these tools, use them wisely, and let them empower you to be a confident, disciplined, successful long-term investor. The first step is always the hardest, but it's a step worth taking. Want more more simple, no-nonsense guides to help you build wealth and navigate the markets. Subscribe to my channel for regular insights and practical advice at your fingertips. Let's get smarter together. And if you found this helpful, tap that subscribe button to join the channel. New videos every week on using AI to build wealth. Hit the bell so you never miss an update. Drop a comment with your questions and share this with someone who needs a co-pilot for their money. Thanks for watching. Your smarter investing journey starts now.